Get ready to dive into the most electrifying updates shaping our world right now. The pace of change is relentless, and if you're not plugged in, you're missing out. This is Qualcomm Pulse, and we've got your essential download of what's hot, what's next, and what you absolutely need to know. From game-changing industry shifts to critical policy moves, we're breaking it all down. Prepare to be informed and inspired as we unpack the stories that are making waves. Let's get started. First up, we're talking about a titan of the tech industry making a significant strategic pivot. Think major shifts, ambitious goals, and a potential for massive growth that analysts are closely watching. We're diving deep into the outlook for one of the biggest names in silicon, exploring its trajectory and what it means for the future of computing. Get ready for some serious insights. Then, we're shifting gears to analyze the intricate dance between innovation and regulation. A major player in the chip world has struck a deal that includes some very specific guardrails, designed to keep a core part of its business exactly where it is. We're talking about government stakes, penalty clauses, and the high-stakes decisions that could redefine a company's future. You won't want to miss this. And the global tech landscape is facing another wave of policy adjustments that could ripple across continents. We're looking at how new directives are impacting major manufacturers with operations abroad, creating new challenges and forcing rapid adaptation. This is about supply chains, international relations, and the cutting edge of technology. Finally, we're wrapping up with a look at the broader market sentiment and expert opinions. What are the analysts saying about the current environment? Is it a time for caution, or is there hidden potential waiting to be unlocked? We're dissecting the signals to give you a clearer picture of where things stand. Don't go anywhere. Hit that subscribe button, ring the bell, and let's get into it. Intel's strategic turnaround and undervalued growth potential in 2025. Is Intel poised for a major comeback? Intel, a foundational pillar of the semiconductor industry, is at a critical juncture, navigating a complex landscape of technological advancement, strategic restructuring, and market perceptions. With the year 2025 on the horizon, the company's performance and future prospects are under intense scrutiny. Recent analyses suggest that Intel might be significantly undervalued, presenting a compelling growth narrative that could redefine its market position. This isn't just about quarterly earnings. It's about a fundamental strategic shift aimed at reclaiming leadership in a fiercely competitive arena. The company's efforts to revitalize its manufacturing capabilities, particularly with its advanced process nodes like Intel 18A, are central to this turnaround. These nodes are not only crucial for its own upcoming product lines, such as the Panther Lake CPUs, but are also intended to bolster its foundry business, attracting external clients to manufacture their chips on Intel's advanced technology. The success of these initiatives is seen as key to unlocking Intel's full potential. Furthermore, the company's financial health and strategic decisions are being closely monitored. The recent influx of $5.7 billion in exchange for a government equity stake, facilitated by the CHIPS Act, has bolstered its balance sheet, alleviating immediate pressure to access capital markets. This move, while providing much-needed liquidity, also comes with certain conditions, underscoring the intricate relationship between the company and government support. The CFO, David Zinsner, has been vocal about the company's progress, highlighting incremental improvements in yields and the strategic importance of developing nodes like 14A specifically for foundry customers. The challenge remains to secure significant external customers for its foundry services, a goal that Zinsner believes is attainable even if initial wins are delayed. The market's reaction to these developments has been mixed, with some analysts expressing optimism about Intel's technological roadmap and turnaround potential, while others remain cautious, citing the immense challenges and the need for consistent execution. Investor sentiment is keenly focused on Intel's ability to translate its technological advancements into tangible market share and profitability, particularly in the high-margin foundry sector. The narrative is one of a company fighting to regain its footing, betting heavily on innovation and strategic partnerships to drive future growth. This strategic repositioning and the potential for significant growth are capturing the attention of investors and industry watchers alike. Next, we'll delve into the analyst perspectives and market signals surrounding Intel's current standing. Stock analysis, Intel outlook, a volatile neutral market amid mixed analyst signals. Navigating the complex currents of Intel's market performance. Intel's current market position is characterized by a delicate balance, often described as a volatile neutral state. This suggests a market environment where the stock experiences fluctuations without a clear, sustained upward or downward trend. Several factors contribute to this complex scenario, including the company's ongoing strategic transformation, the highly competitive semiconductor landscape, and the mixed signals emanating from industry analysts. While Intel is making strides in its technological development, particularly with its advanced manufacturing processes, the path to market leadership is fraught with challenges. The company faces intense competition from established players and emerging innovators, all vying for market share in a sector that is constantly evolving. This competitive pressure, coupled with the significant investments required for technological advancement, creates an environment of uncertainty that is reflected in its stock performance. Analyst opinions on Intel's outlook are diverse, contributing to the mixed signals aspect of the market assessment. Some analysts are optimistic, pointing to Intel's commitment to innovation, its potential to regain a competitive edge in chip manufacturing through its new process nodes, and the strategic importance of its foundry business. They highlight the company's efforts to stabilize its financial position and its long-term vision for growth. These positive outlooks often focus on the potential for Intel to capitalize on the increasing demand for advanced semiconductors across various industries, from data centers to artificial intelligence. On the other hand, a segment of analysts remains cautious. They express concerns about the execution risks associated with Intel's ambitious turnaround plan, the substantial capital expenditure required, and the persistent competitive threats. The lengthy timelines for developing and scaling new process technologies, along with the need to secure significant foundry customers, are frequently cited as key challenges. Furthermore, the broader economic conditions and geopolitical factors that can impact the global semiconductor supply chain add another layer of complexity to the outlook. This divergence in analyst sentiment creates a dynamic where investors must carefully weigh different perspectives to form their own conclusions about Intel's future trajectory. The company's ability to consistently deliver on its technological promises and translate these advancements into market success will be crucial in shaping its long-term valuation and investor confidence. The current volatile neutral market suggests that the company is in a period of transition, with significant potential upside, but also considerable risks that need to be managed effectively. This intricate market dynamic underscores the importance of closely monitoring Intel's strategic execution and the evolving analyst consensus. Looking ahead, we'll explore the unique stipulations within a recent government deal that aims to shape Intel's operational future. Intel's deal with Trump includes a penalty clause against selling off its fabs. A unique clause in a government deal could reshape Intel's strategic flexibility. In a move that highlights the intricate interplay between government support and corporate strategy, Intel has entered into an agreement with the U.S. government that includes a significant penalty clause designed to deter the company from divesting its foundry business. This development comes as the U.S. government has taken a 10% equity stake in Intel, exchanging $5.7 billion in outstanding grants awarded under the CHIPS Act for company shares. The core of this new arrangement is a 5-year warrant held by Washington, which allows the government to acquire an additional 5% of Intel's shares if the company ceases to maintain a controlling stake of at least 51% in its silicon manufacturing facilities. Intel's chief financial officer, David Zinsner, explained that this clause acts as a deterrent, aligning with the government's preference that Intel retain its foundry operations. This measure addresses recurring discussions and internal considerations about potentially spinning off the loss-making foundry division, a move that had been contemplated by some former board members and even Zinsner himself, especially in light of Intel's substantial $18.8 billion loss in 2024. It is important to note that the Biden administration had previously imposed conditions on CHIPS Act grants, requiring Intel to retain at least 50.1% ownership or voting rights in its foundry division if it were ever spun out. The government's decision to convert the grant into an equity holding was seen by Intel as an opportunity to bolster its balance sheet, especially since there was uncertainty regarding the full disbursement of the CHIPS Act grant. This equity stake provided Intel with immediate access to $5.7 billion, eliminating the near-term need to raise capital through other means. Zinsner confirmed that the funds have been received and are now on the company's balance sheet. Beyond the financial implications and the foundry business, Intel is also making progress on its manufacturing processes. Zinsner expressed confidence in the company's 18A node, describing it as being in a really good place with steady yield improvements, and noted that lessons learned would be applied to the more advanced 14A process. He differentiated the two, stating that 18A was adapted for foundry use, while 14A was designed from the ground up as a foundry node, specifically for external customers. Intel's Panther Lake CPUs, utilizing the 18A node, remain on track for release by the end of the year, with broader availability in 2026. The success of the 14A process hinges on securing external chip customers, a goal Intel hopes to achieve next year, though Zinsner acknowledged that even securing customers in 2027 would still allow for a strong foundry business on 14A. This strategic partnership and the embedded safeguards reflect a concerted effort to guide Intel's development in a direction that benefits both the company and national technological interests. This carefully crafted agreement highlights a proactive approach to ensuring the strategic direction of a key technology firm. Stay with us as we uncover how recent U.S. policy shifts are impacting global semiconductor giants. Intel, Samsung, and SK hynix hit by another abrupt U.S. policy change. Government revokes waivers for advanced chip-making tools at companies' China-based fabs. New U.S. export control policies are creating significant operational challenges for major chip manufacturers in China. The United States government has recently revoked temporary waivers that previously allowed Intel, Samsung, and SK hynix to export advanced wafer fabrication equipment, WFE, and parts to their facilities in China. This abrupt policy change mandates that these companies now have a 120-day window to secure official licenses for continued shipments, failing which their access to critical U.S. technology will be halted. For Samsung and SK hynix, the implications are particularly severe, as they operate substantial 3D NAND production lines and crucial DRAM facilities in China. A significant portion of their global memory chip output originates from these Chinese fabs, and any disruption due to the inability to acquire advanced tools or necessary spare parts could lead to production slowdowns and impact global memory supply. This situation may also accelerate the trend of high-tech manufacturing shifting away from China. While Intel no longer produces memory in China following its exit from the 3D NAND and SSD businesses, it still maintains assembly and test facilities in Chengdu, along with R&D operations at Intel Labs, which rely on advanced U.S. tools. The revocation of waivers creates substantial uncertainty for all three companies. Although the option to apply for licenses exists, there is no guarantee of approval, forcing these companies to prepare for potential disruptions and making them more susceptible to U.S. government demands during negotiations. These new restrictions follow the broader U.S. export controls implemented in October 2022, which targeted China's access to advanced chip-making technology, including logic chips under 16 nm, DRAM under 18 nm, and NAND with 128+ layers. The initial waivers were granted to prevent major disruptions to global semiconductor supply chains. However, the revocation means that Chinese fabs operated by Samsung and SK hynix risk falling behind their counterparts in South Korea, potentially diminishing their business appeal over time. The lack of access to U.S. spare parts could also hinder long-term maintenance and operational continuity. Notably, companies like Micron and TSMC, which also have sophisticated operations in China, have not had their export license waivers revoked, suggesting a potentially targeted approach in the application of these policies. The situation underscores the geopolitical complexities influencing the global technology supply chain and the strategic importance of maintaining access to advanced manufacturing capabilities. This policy shift underscores the evolving geopolitical landscape and its direct impact on global technology supply chains. We'll conclude with a look at the overall market sentiment and what analysts are predicting for the near future. And that's a wrap on today's essential updates. We saw Intel making bold strategic moves for future growth, navigated the complexities of a volatile neutral market with mixed analyst signals, uncovered a unique penalty clause in a government deal impacting Intel's fab strategy, and analyzed the ripple effects of new U.S. export policies on major chipmakers in China. Don't miss out on the next wave of critical insights. Make sure you're subscribed, hit that notification bell, and join the conversation in the comments below. Follow us on all social platforms for more real-time updates. Until next time, stay informed and stay ahead.